I'm Ellis Martin. Join me now for a conversation with Jordan Trimble, the President and Chief Executive Officer of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S. Skyharbour Resources is a preeminent uranium and thorium exploration company with projects located in the prolific Athabasca Basin of Saskatchewan, Canada, which was ranked as the best mining jurisdiction to work in globally by the Fraser Institute in 2017. The company has been acquiring top-tier exploration projects at attractive valuations, culminating in 5 uranium properties totaling approximately 200,000 hectares throughout the basin. In July 2016, Skyharbour secured an option from Denison Mines to acquire a 100% interest in the Moore Uranium Project, now the flagship project, which hosts the high-grade Maverick Zone. The company is run by a strong management and geological team who are major shareholders with extensive capital markets experience as well as focused uranium exploration expertise in the basin. Jordan, welcome back to the program.
Thanks for having me again.
You have some really good news with one of your partners, Azincourt Energy.
Yeah, so lots to talk about, lots to catch up on. The news release we had out, partner-funded program at our East Preston project, now a joint venture, majority owned by Azincourt Energy. We're a minority interest holder in the project. They just completed a fairly large radiometric geophysical survey, over 2,500 line kilometers. This was the same technique used by Fission in the early days to locate the high-grade boulder field, which led to the RRR deposit discovery. So a low-flown radiometric survey. They've generated and found a number of radiometric anomalies, which will be refined into drill targets over the coming weeks and months. And the plan, as per the news release, is to follow up with a fairly substantial 7,000-meter drill program later this year, early in the new year. So pretty excited with the progress being made at the project and looking forward to a substantial drill program that will be predominantly funded by Azincourt. Again, this is all a part of our prospect generator model business, whereby we bring in partner companies to advance our secondary projects and we get some cash in stock and have the partners fund the majority of the exploration. So it's a great way for us to offer our investors exposure to several simultaneous programs throughout the Athabasca Basin.
Well, that's certainly fantastic news. What else have you got going on with any of the partner companies?
We announced last week an update and some very high-grade sample results from Hook Lake. Our partner company there is ASX-listed Valor Resources. As you probably recall, we did the deal with them just under a year ago, whereby they can earn 80% of the Hook Lake project, which is the northern extent of the Falcon Point project. The deal entails them spending $3.5 million in exploration expenditures over a 3-year period, making just under $500,000 in cash payments over that same 3-year period. And we have a very large equity stake in the company, over 233 million shares of Valor, which has been moving up quite nicely in the last several weeks here, along with the broader uranium market. But the news release just over a week ago was quite significant. They had grab samples, rock chip samples, and float samples that returned very high-grade uranium, upwards of 59% U3O8, as well as some silver, 500 grams per ton of silver in one of the samples, and some rare earths as well. They had over 5% total rare earth oxide samples, that upwards of just over 5% in a few of the samples that they took. So very exciting. This project, as you may recall, we know there's this historical high-grade outcropping massive pitch blende vein. We did a little bit of work there several years ago. We know there's samples that have returned upwards of 67, 68% U3O8. So it's a very high grade surface, showing a bit of an enigma though. We've never, and previous operators have never properly been able to identify the source of that high grade mineralization. So the great thing there is there's lots of blue sky and exploration upside potential going in and finding the source of that high grade mineralization at surface. And as per the news release, they are planning some follow-up work on the back of this sampling program and some geophysics that they've carried out. And then the plan is to go and drill later this year and early in the new year. And again, if they can find the source of that high-grade mineralization, that would likely be a fairly significant high-grade drill discovery. So we're looking forward to them continuing to advance that project. And again, we will ultimately, assuming they earn in the 80%, retain a minority interest in the project as well as a very large equity holding in the company.
All of what you've stated up until this point bodes very, very well for the companies involved. And explain how it may benefit in the broader picture Skyharbour.
It's a great way, as I mentioned, for us to get exposure to several programs without having to raise excessive amounts of capital and dilute. It allows us to focus our time, money, and efforts at our flagship Moore Lake project, which we should have some news out on shortly. As I mentioned in previous interviews, we have gone out and conducted a 5,000-meter drill program, 13 drill holes. We're just completing that with assays pending. That should provide news flow over the coming months. We are planning then to get back into the field later this month, early in October, to finish up about 2,000 additional meters of drilling. Very pleased with what we were seeing. And as discussed in previous interviews, we are now chasing up high-grade feeder zones in the underlying basement rocks at the 4.7 kilometer long Maverick corridor, particular at the East Maverick Zone, where in our last drill program, we announced the longest continuous zones of uranium mineralization discovered at the property to date. We're seeing the tenor of mineralization pick up a bit in the basement rocks. We think we've just scratched the surface to larger, higher grade zones at depth. But we also drilled a few holes on regional targets, including a new target called the Grid 19 target and additional targets on that 4.7 kilometer long corridor. So we're excited and anxious to get final results back and looking forward to providing some news flow into this improving uranium market.
The company has surely performed well for shareholders, at least in the last year and a half. And I think that trend may be continuing, and you just alluded to it. How'd you compare September of 2021 to September of 2020?
Well, a lot's happened. Needless to say, we are in a completely different uranium market than we were a year ago. I'll just wrap up by saying, with regards to company-specific news flow, we talked about our partner companies actively and aggressively exploring some of our other projects. We brought in Valor as a partner company just under a year ago. So we have lots of news flow from partner-funded programs, but we're also carrying out one of our largest drill programs at our flagship Moore Lake project. So we'll have continuous news flow from that over the coming months and plans to continue advancing that project, which has generated high-grade drill results for us over the last several years. We're looking to announce a 43-101 compliant resource at some point early in the new year. We're looking to build a resource there as the uranium market continues to heat up. With regards to the market itself and the macro picture, we are seeing a notable pickup in interest and sentiment with regards to the uranium equities. And there's a handful of catalysts. The main one over the last several weeks, as I'm sure a lot of your viewers are familiar with, is the Sprott Physical Uranium Trust, which over the last several weeks has now purchased almost 5 million pounds of uranium to move the spot price up from the low 30s to today $40 a pound. They've deployed over half of the $300 million at the market offering that they're raising money through. They have to be in the market every day that they're raising money and capital's coming in. They have to deploy that and buy uranium. So it becomes a positive feedback loop. And we're seeing that working tremendously right now with the last several weeks with the spot price moving. And the good news is we're seeing that trickle into the equities and flow over into the equities where investor appetite and interest coming into the space. We're seeing new institutional money, ESG money continue to come into the sector. It's not a crowded sector. You and I have talked about this at length. There aren't that many companies. There aren't that many ways to play uranium. And so money that does come in to the sector that wants investment exposure to uranium has a limited number of options in which they can play and get exposure to that investment thesis. And so we're seeing the mining companies and the junior companies like a Skyharbour have a pretty substantial move higher. Now, I want to emphasize that I still believe it is the early innings of this bull market. We've been in a long, drawn-out bear market, almost a decade since Fukushima. We're finally coming out of that here in the last 10, 12 months or so. And at $40 uranium, we're still below the average all-in cost of production globally. We're still below the price needed to incentivize new production to come online. You look at most analyst forecasts, long-term price forecasts for the metal, it's about $55 to $60 a pound. As we've seen in previous cycles and bull markets, the price tends to overshoot. There's a number of reasons for that, but there's no reason why we wouldn't see that same thing play out here in this bull market. And focusing on other factors, other tailwinds outside of the Sprott Physical Uranium Trust, we've had a market rebalancing over the last 5 years. We've talked about this extensively, but the supply-demand fundamentals for this metal continue to be very compelling. We've seen a major supply-side response play out over the last 5 years. Production curtailment, we saw the pandemic last year at one point shut down almost what totaled about 50% of global primary mine supply. So there's still these significant risks to the supply side versus a relatively stable demand side. And on the demand side, particularly the last year, we've seen renewed interest from investors. We're seeing this continued rollout of nuclear reactors globally, in particular in places like China and India and other parts of the developing world. The prospect of some of these new nuclear reactors, SMRs, and some of these other advanced nuclear technologies could add fuel to the fire, where we see new reactor types being rolled out in North America and Western Europe, adding to the demand. But bottom line is, if we're serious about decarbonization, which I think we are, and you can see that globally with most countries announcing going carbon neutral or decarbonizing their economies by 2040, 2050, 2060. In order to do that, nuclear has to play a pivotal role. And we're seeing countries now commit to expanded civilian nuclear programs. I think we'll continue to see that. So the demand side is going to continue to grow. The supply side's been constrained, in particular in the spot market. We've seen a tightening up of the market. We've seen the carry trade unravel here. So the next shoe to drop will be the utility companies having to come in and shore up supply. This move from $30 to $40 a pound is almost entirely due to Sprott and other financial players in the market. But when we see the main end user of the commodity, i.e. utility companies, come back into the market, I think we'll see that next leg up. So it's an exciting time. It's still early days. And again, just to emphasize the valuation and where we could go, right now we're looking at a combined total market cap of all publicly traded uranium mining companies sitting around $35 to $40 billion. In the previous cycle, it was over $150 billion. So there's still strong re-rating potential as the uranium price continues to move. And we're excited. We're well positioned at Skyharbour with a portfolio of top-tier exploration and early-stage development projects in the Athabasca Basin, and a lot of news flow coming up and catalysts coming up in the coming months.
Jordan, once again, a very astute analysis of the uranium sector. I really appreciate it. Thank you so much for joining me today on the program, and best of luck to you in the coming weeks.
Absolutely. A pleasure to be here. Thanks, Ellis.
I've been speaking with Jordan Trimble, President and CEO of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S. For the Ellis Martin Report and Skyharbour Resources, I'm Ellis Martin.
Would you like to be one of the first to see who we are following? Subscribe to our audio newsletter. It's free. EllisMartinReport.com.